We put the spotlight on Shriram Finance now, where we spoke to the management. My colleague Harsh, in fact, spoke to the Executive Vice Chairman, Umesh Revankar, about the outlook. Here's what he had to say. Listen in.
That is the idea behind it. We wanted excess liquidity because the liquidity situation was looking tight, but things have become much better now. So we are carrying a little higher liquidity. And this quarter being largest quarter, every year you see fourth quarter is largest quarter. The demand would be good and we'll be able to consume that liquidity built up. So we should be able to do it in 2 quarters.
Understood. And what about the 6 basis point shrink on the back of you lending more towards newer vehicles? So the skew with regard to product, is that continuing? Is that trend going to continue in Q4 as well and maybe Q1 FY26 as well? Is that something like a trend which is going to play out over quite a few quarters?
See, this product mix change, we can't be predicting too accurately because there may be higher new vehicle demand in the Q4. In that case, may get a little postponed. So something which we have to keep around 10% margin left to the market situation, which we cannot predict in advance.
Understood. So I want to talk to you about asset quality because that's held up fairly well. What are the trends you are seeing? Because when we spoke to a couple or when we heard the commentary of a couple of your competitors, it seemed like vehicles will face pressure. But for you, you're not seeing that at all on ground.
No, as far as commercial vehicles are concerned, we don't see any pressure. The what you call the revenue generated on the vehicle is good. Turnaround time is very good, and there is sufficient revenue. So I don't really see. We have not really witnessed any weakness there, and resale also values seems to be strong. So I don't really see any major threat, at least for a time being.
Understood. So sir, with regard to the overall landscape, is there some area or region where you're seeing some bit of pressure from an industry-wide perspective, which you are not seeing on your book, which you have avoided? So what's helping you stand out is what I'm trying to understand, and what's the industry seeing? Because, you know, would be unfair to say that a couple of your players are seeing it and the wider industry is not, and therefore trying to understand where do you stand out?
See, basically, asset-backed lending looks to be comfortable and safe. So most of our business is asset-backed, which asset creation or asset-backed. So that's doing well. What has been a little challenging is the unsecured loan, where the loan would have gone to purely consumption or maybe some other activity, not for productive purpose. That is where probably there could be some weakness, where we don't have presence.
Okay. So OPEX this time was elevated. Employee costs, new recruitment. What's the strategy here, and for how long is the unwind on this OPEX going to happen? So is it going to remain flat for 2 quarters, 3 quarters, especially on the staffing costs, because that contributed to a bulk of that increase?
Yeah, so we will be moderating the staffing now, and we wanted to build certain bench because expecting a quick growth. So the growth is expected in the fourth quarter and then onwards. So the OPEX cost should remain at present level. I don't really see anything further increase here.
Okay. So, sir, sorry, you said for the fourth quarter, you suggested something in terms of guidance?
Yeah, we expect a higher growth in the fourth quarter. Normally, fourth quarter looks busier.
Overall growth will be higher for you. So you've done 4+% on a sequential basis in Q3. You're expecting more than that in Q4.
Yeah, every year it is normally higher, and year on year also, being last year base also is larger. We do expect a bigger business.
Fair. And sir, will gold contribute to that materially, because you're going to reboot gold in Q4 is what your commentary suggested. How much will gold contribute in terms of both value on the AUM as well as how will that also have a knock-on effect on margins, if at all?
See, gold is a very small portfolio in our book. It's
Yes,
around
yes.
2.5% of the book. So it will not really make big difference in the volume per se now. Even if there is a little higher growth in the gold, it will not make a big difference in 2.5 lakh crore AUM. So that's where I think but yes, margins in the gold is good. So it will, whatever improvement we get in the gold will help us in building more margins.
Yes. So you've also started to do PL in a larger fashion. Uh, any uh, any asset quality issues that you're seeing on your personal loan book?
See, PL is nothing but our existing customer wanting some additional loan. So after doing analytics of our existing customer database, we do offer them an additional loan, a called personal loan. So we normally don't go after the market customer. That means the customer is curated and the underwriting is done with the knowledge of customers, the requirement, and also his ability to earn and pay. So the growth in PL will be depending upon the overall growth in the our loan book. As more number of customers walk in into our normal asset-backed lending, and that will become a PL subsequently. So as we keep growing, there is a scope for growing PL.
Fair point. And sir, should all of these levers, and I'm talking about strong CV growth, gold loans coming back, as well as good opportunities available in PL, given the fact that there are no asset quality issues for you, should all of this warrant a 20% growth even in FY26 on this higher base of FY25?
See, I don't, normally we don't give guidance on higher growth. Our long-term guidance or medium-term guidance remains at 15% only because we cannot predict a long-term, but we are quite confident that growth will sustain for a little longer time.
Fair point. So your ROAs have just dipped just below 3%. Back to 3% in Q4. Would that be the right expectation?
Yeah, that is what we are looking at. We are focusing on ROA of 3% plus.